hour, the government reported 164,000 more names on U.S. payrolls for July. That's right according to forecast. A parallel survey of households finds the unemployment rate holding steady at a low 3.7%. Let's go live now to economist Julia Coronado at Macro Policy Perspectives here in New York. Hey, Julia.
Hey, good morning.
Overall, pretty good for workers, right?
Yeah, it's a decent report in the headlines. Again, trend-like growth, a low unemployment rate, and wages ticking up. There's some evidence under the surface, though, that leaves a little to worry about. We had downward revisions to prior months, for example.
Yeah, for May and June, what had been reported was actually lower than was reported.
That's right, and on a 6-month average basis, we're creating 140,000 jobs a month. That's just enough to hold the unemployment rate steady. So that suggests we may not get much upward pressure on wage growth if hiring is slowing to that degree.
Speaking of wage growth, up 0.3% for the month, but if you look at it year to year, wages up 3.2% in a year. How would you rate that?
That's kind of a meh. It's better than it was last year. We're exceeding 3%. That means consumers are seeing real wage gains. On the other hand, that pace has really plateaued this year. We would have expected it to see wage growth continuing to move higher, up to 3.5%, even 4%, if the labor market was truly a workers' job market.
Looking at sectors that added jobs, professional and tech, healthcare as well, retail down yet again, and July manufacturing employment, that did not look good.
No, manufacturing has slowed quite a bit this year. That's in line with the global slowdown that we've seen. Also, another sector of weakness is leisure and hospitality, which is a sector that is tied to tourism. And so we can also see some evidence that the slowing global economy and the trade wars are starting to have an effect on the U.S. job market.
All right, economist Julia Coronado at Macro Policy Perspectives, thank you very much.
My pleasure.
That 3.7% unemployment rate does not represent workers who've stopped looking or have become discouraged. That is another statistic out today called U6, which improved last month with the so-called real unemployment rate there dropping from 7.2 to 7% even in July. President Trump startled retailers with his announcement yesterday that he's going to put a 10% tariff on an additional $300 billion worth of imports from China. Trade negotiations with China have not been making much progress of late. Marketplace's Nancy Marshall-Genzer has more on the tariffs' impact on stores and consumers.
President Trump says the tariffs will start on September 1st. Once they go into effect, the U.S. will be taxing almost everything we import from China. The new tariffs would mostly affect consumer products, which had been pretty much spared from the tariff war. So things like cell phones, electronics, toys, household appliances, and shoes. Retail stocks plummeted on the news. The National Retail Association called the tariffs a flawed strategy that's discouraging investment. President Trump says China pays the tariffs, but that's not true. American businesses and consumers pay them. A New York Fed study found last year's tariffs cost the typical U.S. household $419 a year.
Thank you, Nancy. The markets have been quite a story in the hours since President Trump announced the new tariffs. Yesterday at this time, the benchmark U.S. 10-year interest rate was up at 2.05%, but the bond market soared on the news. Flight to safety, they say, and the 10-year yield is way down at 1.88%. Stocks London is down sharply, minus 2% for the FTSE now, after the Dow fell 1.1%, 280 points yesterday. U.S. stock index futures are down again today. The Dow future down 0.4%, the NASDAQ future down 0.8%.
Marketplace Morning Report is supported by the Candida Fund, working to advance individual dignity and sustainable communities through investments in transformative leaders and ideas. Learn more at kendedafund.org.
Let's get more on the new tariffs by turning to one of China's major industrial regions in the southeast, where we find Marketplace's Jennifer Pack today. Hi there.
Hi, David.
We catch you reporting today in Guangdong province, which is where it turns out so many of the Chinese products that Americans buy are made. This trade war is escalating. That is the news here. What sort of preparations are companies there making as this plays out?
Well, most manufacturers we speak to, they're trying to upgrade to produce more profitable items. Others in the low-skilled end of manufacturing, well, they're trying to reduce their costs. And a big part of that is labor. So they're trying to automate or move production to cheaper places like the interior provinces in mainland China or lower-cost countries like Vietnam.
So you mentioned these various strategies, turning to automation, moving some work to Vietnam. Does that mean that Chinese businesses have found a way to actually mute the effect of tariffs, that it's not that much pressure being applied?
Well, not exactly. Companies that are selling to China, they're still expanding in this market. But the operations where they're exporting to the U.S., then yes, some of them have moved their operations out of China. But even then, let's take the shoe, for example. Most of it is now being made in Vietnam and Cambodia, or a lot of them are. But the components that go into a shoe, I've heard about 50 or 60% of those parts still have to come from China. So you really simply cannot cut China out of the supply chain. What the tariffs do is speed up what the Chinese government has wanted, which is to move away from cheap manufacturing.
Is there pressure, though, rising from Chinese businesses to ask the government there to do some dealing on trade, given the yoke of some of these tariffs?
Chinese businesses have very little influence over the government, right? And a lot of times, in fact, the topic of trade or even trade war have become censored terms on the internet. So people here, by and large, are keeping quiet. They don't want to delve into politics. They are just keeping their heads down and just trying to survive.
Marketplace's China correspondent Jennifer Pack, who's reporting in the industrialized Guangdong province. Thank you very much.
Thanks, David.
Our executive producer is Nicole Childers, digital producer Miguel Contreras, engineer Brian Allison, intern Erica Soderstrom. This is the Marketplace Morning Report from APM.
Ну вот, дорогие друзья, доброе утро. Вы прослушали краткую сводку по экономической жизни США. Рабочие места, в общем и целом, увеличиваются. США воюет с Китаем, торговые войны. И, соответственно, каким образом страна будет выкручиваться этой непонятной свалки между китайскими и американскими властями. В общем, вот такие новости.